Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. How's it going, buddy?
Good, man. How you doing?
I'm good. You're not at home. You're in a hotel?
I'm in a hotel room in Ohio. Yeah.
On the road.
Yeah. I had
right.
had a little business trip for our industry. I was invited to be on a council for one of the companies that we write business for. Perhaps our favorite company, I would say. It is our favorite company.
Yeah.
And great company and great people and very informative to sit down with the executive leadership of the company and James and a few others to talk about, moving forward, what's next,
Yeah.
products,
Stuff that
procedures.
matters to producers and clients. That's pretty awesome when a company does that. They reach out to the people in the field, your field agents, and says, hey, give us feedback.
Yeah, and they really care about what we think as the field force, and that's kind of what this council is for, is to kind of carry that water. And of course, I had your messages that you had sent me with your feedback, and it was spot on, right? And
it's probably
the good thing is, it wasn't news, right?
Yeah, it wasn't nothing anybody else
It's
didn't
stuff,
say.
right? It's stuff they're well aware of as well, and that they are listening and they do care. And they have made strides to rectify things. It's growing. A lot of it's just growing pains, right? They have good products, and good products get purchased and in a high volume. So, but bottom line, super productive. Can't wait to come back and do it again. But very, very, I'm glad I'm here, and I'm glad that this company exists.
Yeah, and I'm glad you had a voice on that council, because if anybody knows Paul, then he tells it how it is. So I'm sure no punches were held or pulled back, and even though you did it with tact. But what is it you say about tact?
Oh, tact is for people who aren't witty enough to be sarcastic.
Yeah. So I'm sure there's plenty of wit and sarcasm going around. Yeah, James there too. He's full of all that too.
Yep, very, very blunt.
Yeah.
And but again, everything was well received by everybody, and so I think but these are big companies and they're big machines. They're a little bit slow to move. Stuff that we want to, whether it's product offerings or procedures or software or anything, it's not going to happen with the snap of a finger overnight. They can only juggle so many glass balls at once,
Right?
And they have many of them, but they're moving. They're moving toward the goal line. No question.
Yeah, and I've seen a lot of improvements just in the few years that I've been writing for them, and I'm happy to see that they're continually making improvements, because you're never at the point where you can stop making improvements in a business, in life, in anything. So that's refreshing to see that they're always pushing forward and wanting to get firsthand experience from field agents and clients, because we are clients too, right?
Yes.
Yeah,
That's right.
Yeah.
Thank goodness too.
Yeah, got a lot of confidence in where that company is going to be 20, 30, 50 years from now. So
Yes.
yeah,
They very conservative approach to the industry, as it should be, and they take everything very seriously, obviously. Very detail oriented, very aware of the landscape of what's going on, whether it's interest rates, which we're actually going to talk about today, or product offerings that sister companies, or not sister companies, but other companies in the mutual insurance space are offering, and which may be good, bad, or indifferent. We don't know, but we'll know 20 years from now.
Yeah.
So I think we definitely have the right people in place around this company, and And I'm glad to be a part of it, small part of it.
Yeah, very cool. Well, yeah, I just got back from some traveling myself.
You did?
Spent 6 days down in Riviera Maya, Mexico for the honeymoon. It's amazing. I didn't do any work at all, so barely had my phone with me. It was nice. Sent everybody who's got a case in underwriting a little update before I left. Say, here's where it's at. I'll get back to you in a week with any changes. So and then I come back, and then boom, like 8 cases have been approved while I've been gone, and they're ready to go. So
Awesome.
yeah, it's a nice return gift. So there you go. But
Well, you need it, right? Because you're still on a house hunt.
yep, hunting for a house. Yeah, so yeah, I need to close those cases and fill up the pipeline again, which is already full. It's a little busy right now, so
Yes.
some time off is good. Time off, get away, kind of refresh, and then get back into it. So it's kind of cool. I mean, in this business, like you and I enjoy the hell out of what we do, and so I was kind of bummed to leave paradise in Mexico with my wife and no kids, no responsibilities, no stress, pressure, anything. But I was excited to get back to work. So
Yes.
like I got back like Wednesday evening and Wednesday night. I was excited about checking some emails and checking some things off the list. And then Thursday and Friday, just putting my head down and getting to work. It's fun. In fact, I kind of wanted to talk about that today. I think it might be interesting to talk about our businesses and kind of how we've grown these businesses, because we have a lot of people who listen and a lot of clients who have either a primary hustle or a side hustle that they want to turn into their primary hustle. And I think it could relate a lot to a lot of the people that we work with. But before we do that, why don't we go back to that question you mentioned, loan interest rates. So we had a question from Bill. Says, hey guys, interest rates are obviously up. When do you think policy loan rates from the company will also increase? So I think you've had some insight into the industry in the last day or two. Why don't you share with us what you found?
Yeah, it seems, Nelson talks about this in the book. Interest rates are up, interest rates are down, but the business of banking, goes on no matter what, right? So first and foremost, my first thoughts are this, to kind of allay any concerns people have. We've said this on the podcast before too. I don't really care what the policy loan interest rate is from a given company. Doesn't matter what company it is. Doesn't bother me what it's going to be, because I understand what's going on. Because I understand that the difference between volume of interest and interest rates and other things, and why a company has to do it. Over the years, when you look at the early 80s when mortgage rates were 22%, what also was higher was dividend rates on participating whole life insurance, right? And that's why E.F. Hutton invented universal life insurance back then too, which has been not great, but that's a different conversation. Yep. But because of the high interest rate environment. And then subsequent policies issued throughout the 80s and the 90s got to kind of benefit from the bond portfolios of those companies that were, they had bought bonds in the, double digits or whatever. But as we hit the 2000s and in current times, interest rates are some of the lowest they've been in recorded human history. And dividend rates from mutual companies have also decreased over the years, right?
Right.
You can probably look this up online and see, hey, rates were at 8%, 15 years ago, and they've come down to 7 to 6 to 5 in some cases, or 4, maybe high 4s or something. So what I think is going to happen with policy loan rates is that I think companies are likely going to increase their policy loan rates, because when you look at their overall portfolio in the bond markets that they have, those rates have gone up. And you can go online and see what bond rates have been, 12 months ago to now. They're completely different. So likely, I think policy loan interest rates are going to increase. But again, personally, I don't care I'm making a company that I'm part owner of, if I'm repaying my policy loan rates, or you're not stealing the P's, I'm helping make that company profitable. A company that I part own, a company that's going to pay me a dividend, likely, a company that I'm giving capital to so they can put it to work somewhere else because I no longer have a need for it right now, let's say. So I think if dividend rates also rise, and again, it's not going to happen overnight. Like this year's dividend from the companies are likely, going to stay the same as they were, right? Or maybe they'll have a slight move in either direction. I don't know. I just care that I get a dividend.
Yeah.
Right. So, but I do think, generally speaking, bottom line, this is kind of a long answer. Interest rates are going to go up. Likely dividends will also follow. It's not going to be an overnight change.
Right. Yeah. And I would agree. And historically, that's been the case. I've got a chart. I can't pull it up right now, but I think it was a 25-year span where it showed the loan interest rate and the dividend rate, and they were really in parallel, but the dividend rate was always slightly higher than the loan interest rate. So that's kind of a historical outlook on that. So if interest rates go up, you could expect dividends to go up, even though dividends aren't guaranteed, but I think should be earning more on their returns.
That's right. I think you might see some slight inversions. Like I think I'll take the dividend because we're going in the opposite direction. It's kind of it's a slow ship, right? And the portfolios, you have long-term stuff, they have short-term stuff. So it's really, there's so many factors that go into calculating the declared dividend from a specific company anyway. And folks, you're never gonna be able to figure out what it is.
No.
So I think you might see, if the dividend for a certain company stays the same, but their policy loan interest rate jumps up in a given month above that, like, don't worry about it.
Yeah.
It's outside your control.
Yeah, exactly. Don't worry about the interest rate. I see this as a prime time. We just had a red flags episode, right, where we talked about here's some red flags to stay away from. Here's one that I see coming down the line is producers throwing out something like, hey, cash value life insurance, I can get you a 0.5% loan rate on your life insurance cash value.
Right.
Where, now they'll start using that as a competing metric. Instead of rate of return, it's, hey, the loan rate, less than 1% loan rate. We talked about this last Friday, right? We have a small IBC mastermind group that we do once a month. And somebody brought this up that he was talking to a client or a friend, and they said, yeah, I was talking to this other insurance guy, and he said he could create a policy for me where the loan rate would be 0.5%. And we started talking, and we gave him our thoughts on why he would say that and what he's actually doing. He's manipulating numbers. But if you think about it, and it goes back to you saying you want the company that you're an owner of to be profitable. And since we're an owner of these mutual companies, we own them because we're policy owners, so we want them to be profitable. What kind of company could be profitable loaning money out at 0.5%?
A company that, won't be profitable and won't be
right.
won't be around very much longer, right?
So essentially no company. Nobody can loan money at 0.5% and remain profitable. So that statement right there is a huge red flag. It's misconstruing and manipulating some numbers that aren't accurate. And but I see that being kind of a potent force out there in the noise of IBC.
Yeah, that's just a marketing gimmick and it's directed at people that just don't understand because they're not willing to put in the work because maybe they're a millennial and they're out there on social media getting their financial advice in 30 seconds or less or 2 minutes or less or whatever. You're spot on. That is not going to be the case. There's no such thing as free money, right? A policy loan, you're borrowing money from the life insurance company. It does come with a interest rate charge. That interest rate charge, the accrued interest rolls over generally, on the anniversary of the policy loan, which also doesn't really occur in anywhere else either. You control the repayment schedule. All these kind of intangible things that are to our advantage as policy owners.
Yeah,
completely outweigh, a small bump up in an interest rate. Which, oh, by the way, mortgages are at 7%. your policy loan interest rates are likely going to be lower than that still.
Yeah.
Just like they were in 1982 when Nelson was in trouble and interest rates shot, prime out to 20%. His mortgages were at 22.
Yeah.
And he can get money at 16, 12, 8.
And guess what? Your credit score doesn't affect the interest rate on your loan from an insurance company. They don't know
you're
your
getting the
credit
same
scoring.
rate as. That's right. They don't care.
So whereas, a 50-point shift in a credit score with a commercial mortgage lender, I mean, that could be the difference in 0.5%, which could be hundreds of dollars a month in this kind of mortgage rate environment. So
I will say this: repay your policy loans, folks, because you're likely, depending on when your policy anniversary is, let's say, you might have another 12 months before your company shifts their loan rate.
Yeah.
Right. So you might be at 5% for the next 12 months. So it behooves you, if you don't want to, pay a slightly higher rate on your policy loan, to get those peas back on the shelf.
Yeah. Yeah. Good point. You said something. You said there's no such thing as free money. And it reminded me of this little sticker I'm wearing today, which today is November 8th, National Voting Day. I went and voted this morning after I dropped the kids off at school and got my little red sticker. And hopefully everybody remembered that when they went to vote, that there is no such thing as free money, where you got politicians offering free everything from daycare to education to whatever, food, anything. It's free, right? There's nothing free. And there's nothing that the government can give you that they haven't taken from somebody else. So somebody who produced something, right?
That's right. There's a good Ayn Rand quote out there. I don't have it in front of me. It's on a picture, like a meme on my phone, but it's basically like, when men who produce nothing, it starts off like that. She's talking about politicians, right? People who produce nothing.
Control production.
Yep. They start taking from people that do produce.
Yeah.
You're basically, your society is doomed.
It really is. Because who's going to be left? Nothing but people who take.
That's right. So I'm in the middle of Atlas Shrugged as well, which is an enormous book.
It's an enormous, man. I had to renew that one at the library 3 times, and I still only got halfway through it.
It's I'm audiobooking it on Audible, so it's a beast though. I thought Creature from Jekyll Island was a beast. This is big.
Yeah.
And she's slow and wordy and
she builds the characters really well too, though.
But speaking of her, though, Capitalism, the Unknown Ideal is a great book that a client of mine recommended a couple years ago. Folks, if you're listening, pick that one up. Phenomenal read.
Speaking of books, I just read, let me see, it's right here, Woke Inc. by Vivek Ramaswamy. Fascinating, really is. There's some stuff I don't agree with him. He's very pessimistic at the end, basically saying that nobody does anything just for the good of doing it anymore. Everybody wants something in return. I don't believe that's true.
I don't think that's true.
I don't think that's true at all, but I don't know that he comes from the same faith background as me or you either. So, and I think that plays a big part in my belief in that anyway. It was eye-opening on how woke policies are infiltrating corporate America, and really corporations are becoming more powerful than governments, because corporations now are deciding what's good for society instead of elected officials being placed there and can be revoked by voting citizens if they don't like what they think is good for society. Corporations are deciding this, and basically, you have somebody like Larry Fink at BlackRock essentially forcing CEOs at other companies to accept woke politics and bow to these woke demands, or else he's not going to invest in your company. You're going to lose market share. And
by the way, let's remind our federal workforce and our military that that's the very person who his company manages your thrift savings plan.
Is that right? I did not know that. Wow.
Yeah, BlackRock. Yeah.
Yeah. So,
it's the largest,
and who does
BlackRock
bow to? They bow to China. And that's why you'll never see anything negative about China from these big corporations, no matter how bad human rights violations are there, or I don't know. There's just it's really disturbing But it goes to show you just how powerful corporations can become, and how they decide social policy. They can cancel you, they can fire you. So we got to be careful about where we put our money.
Yeah, no doubt, man. It's actually fairly scary.
Yeah.
They have so much power, so much influence. And do they have, do these American firms, do they have America's best interests at heart? I would argue a lot of them do not.
They do not. And they don't even have the shareholders' interests in heart, which is illegal. They have public companies.
Oh, but they're fiduciaries.
They have a fiduciary responsibility to the shareholder. And if they start acting in a way that is counter to what's beneficial to the shareholder, shareholders can sue them. But now it's all about stakeholder capitalism, not shareholder, stakeholder. Right. And stakeholder is society at whole. So now he makes this argument that now companies have said they're responsible to everyone, not just shareholders, but society itself, which makes them really in turn responsible to nobody.
Right. I would.
So they can't be held accountable.
I would sell all my stock in companies that are professing that stuff. And it's starting to creep into our industry. If you go to, I'll give you some company names after, but not to dime any of these companies out, but they have these, I don't want to say, maybe woke or overly politically correct and unnecessary things just like on their website. Like I'll be honest with you, I don't care about any of that stuff. I want you to conduct good business. I want you to offer our clients good products. I want you to offer me as an agent good service. I want you to be efficient and good stewards of our premium dollars. I don't care who is doing that as long as they're doing it.
And they're doing the best that they possibly can at it. And that's your responsibility as a business to do what your business is better than anybody for the benefit of people who use your business, people who invest in your business.
Yep.
So, and then when you get sidetracked by anything, all these things that don't matter, kind of like, I remember a story about Warren Buffett where somebody was like, hey, Warren, why don't you like volunteer more of your time for these good causes or champion this cause over here? And Warren Buffett says, the best thing I can do with my time is make money, because then I can give money to those causes.
That's right.
Like that's way more powerful than me spending my time on those causes. I can spend my time making money, which is what I'm best at, and then give to those and let people who have a passion for that cause run with it.
Right. Yeah. That's his unique ability, isn't it?
It's a unique ability. It's like, exactly. That's his strength set, and that's where he should reside, because that, what he does there is best for society.
Hey, Dave, hold on. I got to answer the housekeeper real quick.
Oh, you got a call. All right. I'll just take it from here. So one thing Paul and I were going to talk about, and we got a few minutes here, kind of wanted to talk about how we built our businesses, because I see that I talk to a lot of clients, and almost every client I have has some kind of side hustle. So, and most of them want to turn that side hustle into a primary business. I've got a client who, he's got one of those little scooter, like the Limes or the Birds, those electric scooters here in the Twin Cities. He's got that business. We got clients who are in the Turo business, got clients who do real estate investing on the side. But everybody's got a dream. And most people we work with, their dream isn't to stay in their corporate gig for the next 30 years and then retire with, a 401k. So I think it'd be interesting just to spend a couple minutes talking about how we built our business and turned our side hustles into a full-time hustle in my case. But in Paul, your case, why don't you go? You've created a side hustle that has surpassed your full-time hustle, which you can't get out of contractually just yet, because you've got a contract with the Army for another year or two.
Not really.
Then get out. What are you waiting on? How many times do I have to tell you this?
They were busting my chops about it yesterday. So oftentimes people in this industry who meet me for the first time, they're like really confused. They're like, wait a minute, they're like, you're the dude that's in the Army and you do this on the side, and
you don't have any staff. You don't have any
staff. Like, how are you here? I was like, I don't know. And Chad and I have talked about this. I don't know. I'm just trying to do it right. What my interpretation of doing this business correctly. So yeah, I think you're right, Dave. I live, eat, breathe, and sleep IBC, I would say, first and foremost, which then, lends credence to this business of selling dividend paying whole life insurance that's designed to be used with IBC. I don't think the best advice I could give people is this. You have to have a passion for this. This is the other thing I was meant to do, that we were meant to do. And I'm glad you would, you introduced it to me 5 years too late, but that's fine.
Better late than never.
Better late than never, for sure. So I think first and foremost, you have to want to do this. You have to want to spend hours with clients, talking to them about their dreams, their concerns, how things work, how you use your own all these things that we discuss with our clients, to be good at this. Not everyone. I think people look at what we do and they think, yeah, well, I can go do that. But the people that have these 15, 20 vehicle Turo businesses or sell over $1 million worth of life insurance, in premium dollars, I'm talking $1 million of premium every year, these $1 million roundtable producers or multi-million dollar producers. These people have worked hard at what they do. And so I think you have to have the passion. You have to be willing to put in the time to get educated. And you have to have some sort of unique ability, I think.
Yeah.
I don't think this is for everyone.
It's got to fit your unique skill set. You're right.
It definitely does. Like, I'm not a creative mind, so I'm not going to be a website designer, and I'm never going to be able to do that 4-minute video that you could do, because that's just not what I do. I'm good at speaking with people, and I think being relatable, I think is what has made me had a high level of success early on in the first 3+ years that I've been in this business. So I don't know if that's helpful or not, but
I think that goes kind of back to what we were talking about corporations. Like, you find what you're best at and you pursue it. So I did the same. My first side hustle was real estate, but honestly, it didn't really jive with my personality. I didn't like it. I didn't like dealing with tenants. I didn't like dealing with sellers in these crack houses that I was walking into several times a week trying to buy them with cash. Like, I just didn't enjoy it. I didn't like the people I had to deal with on the investor side either. So I transitioned to something I really enjoyed talking about even when I wasn't in this business, which is IBC. And that became the side hustle. But like you said, it was just carving out time, devoting intentional time to building that business, to getting smart on it, studying, reaching out, talking to people, until it eventually became my primary business. And I think anybody can do it. You just got to figure out what's right for you. And you and I are pretty similar personalities, so this is a really good fit for us. And most people in this business are of a fairly cut from, somewhat of the same cloth.
They are.
I think. We really are. But it also helped me to have some mentors in this business who I could get some straightforward advice from before I even started. And they could kind of lay it out for me like, hey, only about 5% of life insurance agents last more than a year or two, because it's not as easy as you think it is to just sell policies. Just like becoming a real estate agent, people get in that business when houses are flying off the shelves.
It's been easy the last couple of years, hasn't it?
Yeah, right. And now you see who sinks or swims right now.
Right.
When mortgage requests have dried up by 90%. According to Wells Fargo, they just lost 90% of their mortgage sales. So
we've just priced everyone out.
Exactly. Yeah. So, but turning that into a primary hustle, that's a lot of people's dreams. So just keep pushing. It can be done. And
mentorship is huge, like you said.
Yeah, very huge.
That's so key. You have to learn from somebody, and we've kind of modeled ourselves in our podcast and our business off a producer or two that we think very highly of. I tell people all the time that's he's the guy that I'd like to that I'd like to be like someday. And because I think we think about things in similar ways when it comes to IBC. You know, I'm trying to just continue, and you are as well, obviously. Like, we're trying to. This is the message that he wanted to pass along to folks. And I keep learning more stuff about what Nelson, you know, what he said or what he thought, just by hanging around people that knew him very well. And I think that when you're genuine, and I tell people up front, like, I'm not trying to sell you. I mean, you found me, number one, but I'm not.
Right.
I'm never going to try to sell you a policy. This IBC, dividend paying whole life, will sell itself once you know what's going on and really understand it. And that light bulb, I love that light bulb moment when I get this one client that runs the cigar shop and then has a W-2 job, and we're constantly texting, and he, you know, because he's rereading or he's listening to something, or it's something that you said or something that I said or something that somebody else said. And he's like, "Oh, I get it." And it's so satisfying. And that's, for me, that's what really does it is, I think, you know, I would have been a decent educator at heart, like teaching history or something. But this gives me that itch that real estate didn't scratch for you.
Yeah, you're right. That's kind of what it is.
This scratches that itch for me I need to be giving, because you gave to me, right? And I gave back. I bought 4 policies. I was like, yep, this is what I want to do.
Yep.
Easiest client ever.
Yep.
Facts.
Yep, you were. I've had some easy ones since, but yeah, they were definitely the easiest. So,
gosh, we could just clone 100 of those a year. It'd be great. And then, like you said earlier too, this space that we're in, and I guess I was listening to David Stearns the other day. There's only about 300 active IBC practitioners.
Oh,
now.
300. Okay.
Yeah. So people drop off. They don't renew.
Yeah.
You know, whatever happens, and that's fine. So it's even smaller, which is why I think that we've been fairly busy with leads off of that Nelson Nash Institute website,
right?
Because but I find there's huge value, and those are the people I want to be around, because I want to pass along Nelson's message in as pure a form as I can.
Yeah, absolutely. So part of the first conversations we have with people is it's either one, move them forward to the next step, or 2, get them off my schedule, because there's other people waiting and I have limited time, and there's other people that want my help. So we like to weed people out in that first conversation as well.
Yeah, I'm glad you mentioned that, Dave, because I tell people this now up front, kind of bluntly, like, hey, this is an interview for me, of course, but I'm also interviewing you. And as the years have ticked by, I've become pretty in tune to who I think is going to really work well and who isn't. People that will make time to make an appointment. And of course, I don't know what's going on in people's lives, but generally people can carve out 15 minutes for a call.
Yeah.
During a week. And if they're not doing that, I feel like that's almost an indicator that they may not be the best fit. And I tell them this: I'm not going to chase you either, right?
No.
I'm here for you, and I want to be here for you. But this has to be a relationship that gives and takes. And
yeah.
So,
well, just one final thought on the business is, I know I'm at the point where I'm growing this. It's becoming very busy, and to keep giving clients the best service possible, I'm going to need to bring in another advisor or 2 to start taking some of that workload off of me, because I don't want people falling through the cracks. I want to be able to give everybody the time and attention they deserve and need. So I don't know, maybe there's somebody listening who has a passion for this business, who's hungry and has the bandwidth to maybe make this a side hustle, or even, has been doing this for a couple of years, but they need another way to, they need a niche. And IBC is really a great niche for the insurance business. I mean, you and I would not be selling life insurance if it weren't for IBC. Not something I ever said I wanted to do when I was a kid. Like, I want to be an insurance salesman. No.
And again, solving the need for the banking function using the product makes it an easy product for people to buy, because they realize how powerful it is. I mean, this is an asset class that the wealthy have been using for forever. since it's a first existence a couple hundred years ago.
Yeah.
The big banks are now using it. They're using life insurance products to help fund their pension plans or their executive bonus plans or you name it. So if they're spending billions on these products, then why aren't the average middle class Americans doing it too? And it's because they don't realize because they need to rethink their thinking and likely relearn what they've learned about it.
Yeah.
So
and in fact, there's a whole lot more to whole life insurance, as we have recently discovered, than anybody I have ever known knew about it. And that's probably a topic for a different time. But just some amazing things that keep coming to light about how powerful this product is in the process of banking.
Yes.
So, yeah.
It relates to banking more than anyone would ever realize.
Yep.
Whether you used your cash value as collateral, whether, how a bank looks at you very favorably, not only from the death benefit side of things, but from the, your current cash value, right? The net present value of the death benefit in your policy or policies. You're very easy to lend to.
Yeah. You become very marketable and very bankable.
Absolutely.
It's one of those things that can only help your bankability and make you a better partner with the banks, in the eyes of the banks, if you need to use them, and if you're purchasing real estate, you probably need to use a bank if you're an investor. So yeah, well, that's awesome. I think that about does it for today, man.
Cool, man.
Yeah. Enjoy your hotel stay in silence, no kids running around. You can get some work done. So I have, yeah, this was good. I'm glad it worked out. And, I took a later flight, out of here just so I could meet I have a client up here and, we're going to have lunch and yeah, tell him hi.
Yeah, I will. I'll
share
tell
a client.
Hi. Yeah, we do. Shared client. So it was interesting at the time that this person became our client. I had a conflict of interest because those, I'm, active duty. So I was like, hey, I can't do this business, but I know you want to do IBC. I'm going to give you my first, my original agent and my good friend Dave, who will be your guy. And of course, now that person's out of the military and I'm not his supervisor anymore, so I'm going to be his agent from moving forward. But right. You at least got to share a couple of cases in that. 3 of those, right? And now we're sharing more through the podcast, which is
we are got a couple closing this week. So
our
apartment syndicators. So pretty cool.
Very exciting.
All right, buddy. Hey, have a good trip home, and we'll talk to you next week.
All right. See ya.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.